Yeah.
Hey, everybody.
Sorry, Alisa.
I just needed my vodka before we started.
Settle down. All right, so welcome to today's episode of the Epic Hour. We're actually going to be talking about credit and debt and what roles those play in whether you're private lending or whether you're getting mortgages yourself, and whether you're starting from scratch or whether you already have a portfolio. We're going to really deep dive into all of this fun stuff. Yeah. So we are shooting from a rental property today.
We are.
So, yeah.
It's one of our fine gems.
Yeah. So we might go for a tour after, and you guys can see most of the work was done in the basement here.
It is. It was. It was to increase the ARV or whatever.
Whatever. Just the professional term.
Right? I don't like professional terms. I'm all about the layman's. So we repaired crap so that it was a better product. That's pile of crap. But no. Honestly, we renovated the basement. We finished it because that's a really easy way to capture more in a property. That's the short and skinny.
Exactly. Anytime you can add bedrooms or bathrooms, you're just literally adding money into your product, because that is what is going to rent for hire, and it's also going to appraise for hire as well.
Gotcha.
Cool. Well, hopefully everybody's had a great week, and we hope, again, as always, that you guys are going to type in your questions and be as interactive as possible, because again, we are here for you guys. And so, and ladies, whatever. I call everybody
Peoples.
guys. So
peeps. We're here for you peeps.
Yeah, so,
chirp, it's fall.
So if you have any questions, please type them out, whether you're on Facebook or we're on Instagram too. Instagram, we're on our Zoom, I guess. So yeah, and if you're watching the replay, we appreciate you too.
Yes.
And don't forget, you can always email content or questions you have, and we can always answer them on other Epic Hours, or we can maybe create an entire episode around what you're wanting us to talk about.
Absolutely.
That's what we're here for.
Absolutely.
Okay, so should we just rip into it? Yeah.
Just pull the Band-Aid.
Okay, so we actually decided that who better to talk about credit than an amazing mortgage broker,
right?
So we actually have a special guest with us today. And some of you are going to know who this is, because anybody who has a hassle-free landlord house with us, we send you to one of two mortgage brokers. So today we've got Char Weightman with us. So come on in, Char. We're going to put her in the middle.
Yeah,
that's like the hot seat.
Yeah, it's the epic sandwich.
Yeah,
that's what this is.
So here's Char.
Hello, everyone.
So Char is a brave soul today. She is pushing out of her comfort zone. When we invited her on when we invited her on here, she's like, "Oh my gosh, I want to say no, but I'm just gonna do it." So good on you for
step out of my comfort zone.
Yes. Yeah. Like, this is what we preach, guys, right? Yeah. Nothing good lives in your comfort zone. Push past that, and then that's where you grow. That's where
you know what lives in comfort zones?
Okay. Awesome. So as far as credit and debit. Oh my God.
That's part of it.
Yeah. This is actually going to be credit and debt. There we go. Minus the I. So we're just going to kind of go through some different questions. And again, if you guys have questions, you've got an expert here, so now's the time to be asking this stuff. And if you want to, if you've worked with Char in the past, why don't you go like, woohoo, or, a party hat emoji or something like that, because then we'll have some tracking for who's actually worked with this awesome lady. So yeah, how did Char, Alisa, and Rochelle meet? Again, there's a business together. So we were just talking about this beforehand, so I'll let these guys talk.
You want me to start?
Yeah, go ahead.
Okay. So back in the day, so I'm a little older than these guys, but anyways, I used to ride horses, okay, for those that don't know, back in my previous life. And at that point in my life, I actually met your mom, and then you as well through trail rides with horseback riding. But little did we know, we would actually kind of come back and circle back. It's roughly 20 years later. Okay, so you're 25. What are you worried about? Well,
I just had my 40th. So
Here, I'm trying. You're not working.
Like 29 and older.
But then we ended up meeting her again. And this is how Rochelle ended up meeting her, was through a realtor that mentioned this amazing mortgage broker. And we're like, ooh, our ears are perked, because we like amazing mortgage brokers, because they're amazing team members to have. And then the next thing you know, Char and I have also partaken in EWI together. And now
Some
she,
people might not know what EWI
oh yeah, so Executive Women International, and it's an amazing networking group of professional women who like to mingle with other professional women and learn what they can about the world, and also gather money for scholarships for single parents.
It's a great group.
It is, yeah.
Awesome. Yeah, so it's wild when, again, sometimes you meet people in certain areas of your world, and then all of a sudden, for some reason or another, the universe reconnects you, right? So we all have had different paths, and yeah, it's just really interesting. And yeah, Char's been a boss. How long have we been working together, I'd say?
Oh, geez. Steadily, I think for at least 2 years, I would say.
Yeah.
Yeah.
And
That's my number
then
two.
you just got an awesome...
I did. I just won Summit 5, so I'm top 5% across Canada. It's,
Yeah.
So 5 mortgage brokers, I think, were in Saskatchewan. So 47
Nice.
made the list, and I was one of them, so it was awesome.
That's pretty amazing.
Congratulations.
And it's thanks to all like the investors and working with the two of you, like that's what got me there.
So you're saying that your life and business elevated because you...
Because I met you two.
I wasn't going to go that deep. Okay. Alrighty. We're not paying her, by the way, for this episode. These are
I just want
all-
more referrals.
Fair enough.
But isn't that awesome though, the
It
spin-off,
is.
right? So as we're growing our business, this is where we're able to work with other people to elevate their businesses. And again, when people are like, oh, it's got to be win-lose, it's the wrong mentality. Because when you look at things as a win-win, that's when it's just so abundant and there's just so much opportunity and it's endless and it's having the right mindset. And just last week we had a home inspection actually on one of the properties because the banks are getting a little bit tighter for stuff and whatever. But I was introduced to your awesome, or I don't even know if you work with her, but she was an amazing female home inspector. And again, had I not gone to open up the house for her and her husband, I would have probably never met them or crossed paths. They're amazing. They were asking lots of questions of our business. And I actually had somebody in the field and I was like running half an hour late because the combo was so good. And then I was like, okay, I really have to go. But you know, it's just those connections that there's no price point you can put on that. And because, you know, we take Char's opinion really highly, then I'm more highly likely to have good rapport with other like-minded individuals. So that's pretty cool. I like that.
It's building that partnership, that
Yeah.
team, right? Like,
Yeah, for sure. So that's awesome. So now we have an awesome home inspector in our Rolodex too. So, you know, if somebody calls us and says, hey, who do you use for a home inspector? Have I got somebody for you? Because that's not something we usually do. Alyssa goes through most of the properties.
We rely on me. I know a little bit. Don't worry.
Most of the stuff we do is pretty vanilla as far as what the properties are. You can see a lot of things that are happening and you know if there's moisture issues, you know what to look for. Again, this is after looking at hundreds of houses a year. Yeah, thousands, yeah.
I'm looking at 21 this week.
There you go, right? So you're gonna just get better as you do something. So yeah, so that's pretty cool. Awesome. So we talked about that. And then what is Char's role with an E.P.I.C investment program? So really, if anybody's interested in buying a hassle-free landlord house or tapping into current equity in your property, Char's licensed all across Canada. So she can actually work with our investors no matter if you're in Toronto or if you're in Vancouver or anywhere. And I think you have had some clients come back to you. They didn't even get a hassle-free landlord house. They just used you or helped you, whatever. However you want to use your services.
leverage the equity in your house.
To leverage their equity, yeah. And that's pretty cool too, because again, sometimes people are like, oh, I don't know if I qualify. I'm like, go talk to Char, right?
Have the conversation.
Yeah, don't count yourselves out until you've talked to a professional.
Yeah. I help you
And-
build up and so that you can invest. Like I'm working with one right now. She's in BC and amazing to work with. We're just leveraging their property so that they can get a home equity line so that they can invest in the hassle free.
Yeah, exactly.
And that's a big key. Sorry. You need to understand that I think that's what people miss with a good mortgage broker, that they're there to help you build and answer debt and mortgage questions. And guess what, guys? They like when it comes to getting a mortgage to them, they don't charge you for that. They charge the banks. That's how they get paid, right? So they're an amazing, again, you got to find the right ones out there that know the information, because they don't all know all this amazing information on how to best utilize lines of credit and those kinds of things, or debt rebuilding, which we'll get into deeper.
Yeah, and then we're exactly going to roll into that. So Char, in your experience, what is the main reason investors would not qualify for a mortgage?
Around the stress test. So now like any mortgage needs to be stress tested at 4.79. So it doesn't leave a lot of outside debt that you can have in payments. So example, like car loans, like big car loans, like $700, $800 car loan payments, they can really affect what you can buy as a hassle-free landlord house. And also now a lot of lenders don't look at your balance on your home equity line. They actually look at the limit. And so they take that limit at 4.79, and then we go over 25 years and we have to use that as a payment and not the interest only payment that you actually make. So like those two big things, like any outside debt, that can really cause a big hurdle.
So what can people do to improve their eligibility around qualifying?
Sometimes what we'll do is we'll just kind of wrap everything in. So like, so say for example, if they have like a balance on their credit card or, you know, things like that. And I already have to debt service that whole entire home equity line limit. We'll pay everything off and put it all into the home equity line. So then it just kind of frees up some more space. So it's just more creative lending, I guess.
Yeah, which aligns really well with how we do our business because
Yeah.
it's all based on creative financing. So this is why, again, good
Go to an expert.
alliance. We have a question from Vita. Vita says, can we get Char's contact information? 100%. You betcha. We're going to put it in the comments for you. And then on the, when we post this, we'll try, and I'm guessing we can put links to Char's Facebook page and social media and all that, so you can follow her too. She drops really amazing content. And do you want to talk about the financial vault?
Yeah, a little bit. Yeah, so I created the financial vault just to help people get prepared to buy a house. So basically I help them rebuild their credit. So let's say they, you know, claim bankruptcy. Like those are a lot of different things that you need to look at. So the biggest thing with credit is you need to have 2 trades, 2 years is the minimum that any lender will want to see. So a trade line is a credit card, line of credit, anything like that that's reporting on your credit bureau. And then they want to see that for 2 years. For it to actually be established, it needs to be 4 to 5, but that's the minimum, 2 years, 2 trades.
So would somebody who goes and gets, for example, kind of those credit cards where it's like pay as you go, would that qualify or not?
Not the pay as you go, it doesn't
Okay.
actually report, but if you do a secured credit card. So so there's some like Capital One would be one place where I would tell you to start because they'll do actually a secured card with $300. You just send Capital One $300 and then you use it as if you're using a regular credit card and it reports on your credit bureau.
Perfect.
So it's those little hacks, right? Because some people might just have a pay-as-you-go credit card and they're like, but I've had this for 5 years. What's going on, right? So it's really important to make sure what you're doing is actually the right thing because time's going to pass anyway, so may as well get it started.
And again, that is another big reason that we align with you is because you also have that wanting ability to better others, which is, it's hard to find those people. Tons of people want everybody's business, but not everyone wants to educate in return.
Yeah.
And that's why she's such an amazing component to our team because she has that drive in her to be like, well, here's some extra information. Here's something more that you probably don't know just so you're aware.
Yeah.
Right.
Yeah.
And we loved that about you.
Yeah. And
that's
being
why we
willing to
care.
foster them from where they may be at to get them past that finish line.
Yeah.
Because some people just get bored, right? They're
Yeah.
like, oh, well, it's not going to pay me for the next 2 years. Oh, you know.
I believe in karma and it all comes back around. And you know what? The more I help, the more people can get into hassle-free
It's
houses.
all about the energy.
Exactly. It's an energy thing. All right. So is credit a factor in any way for investors looking at the hassle-free landlord program or fund to flip programs? Do you want to take that one or I can answer that one?
What? Yeah, you're
Oh,
answering
okay.
it. This isn't my show. So we did the last 10 minutes of the tour.
So for the hassle-free landlord program, yes, you do need good credit because you actually have to qualify for a mortgage to purchase a rental property. Whereas for the fund to flip, you don't because essentially you are our bank. So you're not qualifying for leveraging or any financing. You are our bank. So people have lots of equity, lots of cash, underperforming invested funds. Doesn't matter if you don't have credit or your credit's maxed out because you're our bank. So that's again why we have the different opportunities and we customize the play based on what your goals are and what you're looking to build in your world.
And that plan is actually built out also with the help of Char.
Yeah. And Bailey and I do this all the time. We'll have a phone call with somebody and they're like, oh, I love the idea of getting a 15% return through the hassle-free landlord program. I don't know if I'll qualify for a mortgage. And we're always like, you know what? Talk to the mortgage brokers because they're going to be able to tell you if you do or you don't. And then once we have an answer from them that's a definite, then we'll go forward and put a plan together. right? Because again, we don't know either. And sometimes people will say, oh, well, I'm self-employed, I have this, I have that. And I'm like, I know that you need 2 years worth of notice of assessments. Past that, I know nothing. I'll hand you off to the professional because I'm going to stay in my lane and I'm going to answer the questions that I know. And then Char's going to do the same with her side, right? That's just how it works. So we have a question. It says anonymous. Oh, they didn't write that.
Okay.
I thought it was some.
I thought it was a name too.
Whatever. I did too. So we're easy to select.
Yeah.
So when using a line of credit to invest in a fund to flip, if you make the minimum payment of interest only each month for the term of the loan, will that affect your credit rating?
So I want to touch, I don't know which type of line of credit. There's two different types of lines of credit. So when we use an unsecured line of credit, we actually can't use it as down payment for a rental property, but we can use a home equity line of credit as down payment. And if you do only make your interest only payments on a home equity line, you are fine. It actually doesn't reflect your credit score. So say for example, okay, so a balance on just a regular line of credit and it's $5,000 and you're always very close to that limit, that'll affect your credit score. Whereas if you have a home equity line and it's $100,000 and you're close to that $100,000, it doesn't affect your credit score like it does on an unsecured.
Cool. So what if somebody had a $600,000 home equity line of credit and then they decided to lend out $500,000 to us at Epic? It doesn't affect their credit?
No, it works exactly the same way as a mortgage. So it just reflects differently on your credit score.
Awesome. As long as you make the minimum payment.
Yes, you have to make the minimum payment.
Yeah. Yeah, and sometimes people will ask us that as well because, again, with a fund to flip, we don't pay you monthly interest. We pay you in a lump sum at the end of the 6-month term or if the property sells quicker. So you are still responsible for making those minimum payments. Again, this is why a lot of people who have big home equity line of credits actually get some hassle-free landlord houses to debt service that monthly interest payment through the monthly cash flow, and then they'll have a big catch-up payment when the fund to flip deal is over. So again, this is why it's, again, we talk about building our own ecosystem and how they work so well together, but it doesn't just work so well together on our side. It can actually help you build out a better financial blueprint too. So, cool. Thank you for the question. We would love 10 more. Okay, so this is an interesting question we have. So what role has credit ratings played in your lives, both before and after starting a business? So we can actually answer this individually because you start a business and so let's start with the
credit rating. Oops. So it's no secret that when we started this, it was a thing. We had nothing. And what we did have, we maxed to make it happen. And so now we're in a position, we're paying that all off, and that'll change ratings and all the things. My credit rating score, it'll take a couple of years to come back. Do I, for me, in the position I'm in, care? No. Reason being, we don't build things out for us like everyone else in the world. We have been taught and mentored by very, very wealthy people how to control everything and own nothing. Okay, so that's where I'm coming from. But yes, back in the day, it's no secret, I used what little divorce money I had coming to me. I had a fork in the road option. It was either put it as a down payment on a house and a vehicle, so me and my son could do that, or invest it into the education of us. And I chose to do that. So so I took what I had and I put it into this and what it's grown into, and I'm super excited I did. And yes, I racked up credit cards because there was months when that's what we had to do to get by. And now we're in a position where that's changing and it's awesome. But I'll probably end up by next year having amazing credit and great. But what'll start happening is the banks will start calling me going, hey, I have some money for you. Hey, you know what? Just come take our money. Please take our money. Take it. Which, great, because then I can put it into more investments and more businesses and just keep it growing.
Yeah, and one thing I want to point out about your story is, again, Alisa made really good money in her previous life at her other job. So what did you do before you quit your job?
What did I do before I quit my job?
With credit.
Oh, I called and said, can we increase everything?
Literally.
Yeah.
Hey, can I get this credit card and this credit card?
Oh man, when I open my wallet, it's like a Rolodex.
I did the same thing. Before I go self-employed.
Yeah.
Exactly. So this is why it's really important, guys, to realize what's happening, because a lot of people we work with, their financial goals are to work themselves out of their day jobs. But I always say, make sure you get all of your credit locked down before you do that, because T4 income is the easiest way to qualify for new debt. And once you have that, or don't have that, pardon me, it changes the game, right? Yeah.
And you can't do anything if you become self-employed. 2 years minimum.
There's no magic bullet. Like, you have to put in the time. So if you get all of your credit lined up beforehand, that can actually help replace your income. Like for the hassle-free landlord program, for example, we have some clients that are like, hey, I want to get 4 houses because I want to get $2,500 a month of cash flow. That'll help ease me out of my job. I know that's going to show up every month. And then they lock that in before they quit their job. And then sometimes they're going to get a payout. They might have a LIRA. They might have RSPs that they can put to work in a different aspect. And again, that's where we set up that plan with people like Char, who can help us get you to your financial goals faster.
And ironically, I was talking to someone that really wants to be part of our team. And I told him, I said, doing this, you will take a pay cut. But I said, eventually you'll get to that place. If I was you, you still qualify for one more rental property. You need to go get that rental property and then circle back and have this conversation with me, because once that changes, it's going to take you a lot longer to get you back to that position. But once you've taken that property and you're in that position and you have it, you're going to be quite a while before you're going to be able to get another one. And that's the time to then look at coming on with us.
Yeah. So everybody's situation is different. The other side of when you're doing the investments and buying the properties, Char, what would you say? Like, again, everybody's situation is different, but usually how many properties could somebody buy before the bank's gonna be like, whoa, hold on, what's happening here?
I would say, like, on the traditional side, it'll be about 5.
Could they buy that all in one time, or would they have to stagger that?
I'm finding that there's like one lender, like we had one investor that's bought a property and now they've just gone to do their second. And the lender was like, nope, no more. It looks like they're trying to build their rental portfolio. And I was like, I just kind of laughed. I'm like, oh, really?
Does that look like that? Oh my God. I wonder
I'm
what's
like,
happening
okay, just
here.
approve this one and I'll go somewhere else for the next one.
Right? So, and it's crazy right now. And this is just for me looking in, but it looks like the banks are really tightening up their purse strings against rental properties. They're wanting more homeowners to buy houses right now, as opposed to people building and stacking their rental portfolios, which again,
I know why.
some people might say, why are they doing that? But again, you have to look at all the economics that are happening, and you know, the writing's on the wall. And at the end of the day, every bank has their own mandated portfolio structure that they're willing to go. And when people are running to the bank to get rental property mortgages, they're going to cut it off because they're like, no, our portfolio is already full with that. We don't want any more. Thanks. And then some people are like, but that's not fair. I've been banking there for 10 years. Guess what? The banks don't care about you. So that might be a little bit of a newsflash for some of you, but they don't care. They care about their bottom lines.
And that's again a big difference between a mortgage broker and a bank. A lot of people, like Rochelle said, they'll go to their bank and think, oh, I've been here 10 years and I'm all this and I know Rob by his name and all the things. And then you go in and they're like, no, we're not going to do anything for you. And you're like, what? The difference is Char represents you. She's going to go and battle for you and turn around and get the best opportunity she can for you, going and pimping you out to all of these, for lack of all the professional terms.
We're obviously very professional here.
And that's the thing though, is like people, they're like, well, this is not like my primary property. I'm like, no, it's not. It's a completely different thing. Like you can walk into the bank and say, I want to buy a primary property, easy, very easy.
Yeah.
Rental property, not so easy. It is very tough. We got to jump through a lot of hoops to get there.
You know, one of the reasons why, because the bank goes, wait a second, that person's figuring out how to invest and they're getting smart. Stop them. Don't prevent it.
What do you
right?
mean? What do you mean that they're going to go borrow their money back at 2.5% and then they found a way to turn around and invest it making 15? What's going on here? This can't be right, right?
Yeah.
Making double-digit returns completely passively.
Of course the bank wants you to go do that. They have your best interest at heart. No, they love homeowners that are uneducated on how to work with their funding and how to work with, not be able to work with their loans and all that, because then they own you forever.
Well, they want you to invest in their investments, right? Because that's how the banks make money.
Yeah, with your money. You go work really hard all day so they can make money with your money that you work really hard for.
But that GIC is 1% right now.
I'm
Right?
going to give you a GIC.
It's just so comical though. We've had a lot of clients where they do their first fund flip with us. So they go to the bank and they pull out $150,000, $250,000, $300,000 from their line of credit. And of course the bank's like, what is this money for? Why are you making a bank draft to a law firm? What's happening? Are you buying a property? And they're like, no, I'm actually a private investor. So I'm actually funding a deal. They're like, that must be illegal. We can get you a better, safer investment. And they're like, what? You're going to give me 1.5%? Right? They're like, I'm good with the 10% I'm going to be making. And then of course, 10%, nobody can pay 10%. You're going to lose all your money. And I'm like, let me try it, right? Like you just have to be able to just, I don't know, put the blinders on and just not listen.
It's funny because a lot of people don't realize you are a client to the bank, okay? They walk in thinking that, you know, they have to do what the bank tells them. And that's not true. You can go get secondary advice to decide what is best for yourself. Do not forget that.
Yeah. And then, Char, we'll go back to you now. So what role has credit ratings played in your life before and after starting a business?
Well, I actually before worked for the bank, so that was interesting. But I basically, before I left, I made sure I bought my house that had a basement suite in the bottom. I made sure I had all my lines of credit, as many credit cards as they would give me. So whenever you start out a business, it's always tough in the beginning. The money's not coming in. You're having to live on credit. So basically, I just maximized everything, but I always made sure I made that minimum payment. And I always made sure that my balances stayed below the limit so that my credit rating would stay. It does hurt it being closer to the limit, but as long as you make that minimum payment and it does stay under, then it doesn't hurt it as bad. Is when you go over that limit and it's actually caught on your credit report, it'll really hurt you. So basically, I just made sure that I had everything, and I made sure I had a tenant in my basement that paid my mortgage, and I didn't have any housing expenses, and I just kept plugging away.
Perfect. So for myself, I actually had bought a house where I had a basement tenant, same thing. And back in the day when the mine guys were here, I actually rented out my spare room as well. So my house cost me $1,300 a month to live there, but I was actually making $1,500 a month because I had a basement tenant and the spare bedroom. So I was making $200 a month to live in my space, which is not bad, right? Again, now they call it, I think, house hacking or something like that. I don't know. I was doing this stuff before I knew it was a thing, just because I'm very frugal. And I was like, I don't need the space. I work 80 hours a week anyway. So whatever, right? Somebody's going to pay me to live in my house. I'm good. So again, it's all these little decisions. So for myself, I've always tried to keep my costs low so that I can technically make more to try and get out of the rat race. So again, anybody who's followed us on here, you know that I'm retiring in a little over 2 years because that is financial freedom. I'm out at 40. So when we started the company, I was 30, same thing, maxed out lines of credits. I put a second mortgage on my property to pull out equity. And it was like 19.99% interest, guys. Like when some of you guys are like, oh my God, there's no way people do that. There's no way people can get out of that. I'm like, there was a reason, right? Yes, it was expensive money, but at the same time, it was $25,000. What did we do with that $25,000? That is literally how we bought Alisa's primary residence. So like we did so many different things, right? Yeah. And it's just creative. So when we talk about how our finances are super intermingled, we're talking super intermingled. We were just like, TMI. We're like, where can we get this from? What's happening here? Well, you know what? I don't have the money. I need your money to pay this month. Like it is what it is, right? And that's just what happened. But again, we saw what we were building. We saw what was going to eventually be something bigger than ourselves. And that's really where we're at. What's interesting now is that in this next 12 months, this is where everything is turning for us. Because I literally, as of tomorrow, have sold my primary residence, and I will be able to pay off all my debts, and I'll have a nest egg that I can then invest myself. And so it's funny because some people are like, well, are you going to buy a hassle-free landlord house? And I'm like, no, actually. I found a way that I can invest my TFSA making 29%. So I'm going to do that because it's tax-free. And what better way than earning tax-free money, right? So everybody's situations are different. And this is, again, why we're going to work with you in your specific situation to figure out what makes the most sense for where you're at in life. And then what's interesting is Alisa's house that we originally bought, which is our first rental property, actually burnt down. And so there was a fire, and it actually got pulled over.
I cried a
Pushed
little.
over. Pushed over.
I cried a little.
Pushed over.
It's hard losing your house.
Pushed over because it was just,
There was nothing left.
There was a lot of damage. And so we're actually going to be building a duplex in the spring on that lot. And so from there, Alyssa's going to be able to pay off her mortgage and get some of her debt paid off, or all of her debt paid off, and have a little bit of a nest egg to invest at that point. And so again, sometimes people are like, "Are you going to buy a rental property?" And
well,
like,
and honestly, for me too, like when I left my city job, I had our RSPs, and mine are at Olympia Trust and invested in E.P.I.C. Like, it just for me, it's just like, this is a no-brainer. It just makes sense. This is what we're doing.
they're
right?
not actually invested in E.P.I.C because that's illegal.
No, but in the process of what we do. No,
They're
I'm a hard
invested
money
in
lender with my RSPs.
There we go.
So, yeah.
So just for all those people watching out there, you can't do that. You're right, you can't. So we do follow.
Okay, back to I don't speak professional. Professionalese. It's not part of my nature.
But exactly. Alyssa's got 6 figures invested in real estate because, again, you can't access those funds in your LIRA or your RSP. So why not make double-digit returns by, helping somebody else out?
Right.
Okay, cool. So we got that one. So what are your best tips for young adults when growing, managing, and taking full advantage of their credit rating?
I would say at least get a credit card and a line of credit at a very young age, because those are 2 credits that will follow you too, right? So the longer you have credit, so say you got a credit card when you were 16 years old and never closed it, and you still had it when you were 25, it would really help because it would be established. And then basically, yeah. So because anytime you get a loan or anything like that, a loan actually is an installment, right? So you pay the regular payments every month, but once that loan is done, you would have to re-qualify again to get another loan. Whereas the credit card, line of credit, they always stay with you because they're a revolving balance.
Did I hear you say you could get a credit card at 16?
Sometimes, yeah, if you get a cosigner.
I actually saw this rent hack or credit hack, whatever it was, on one of the real estate investors pages saying that, and I don't know if you can do this in Canada, maybe you can educate me, but they said if you put your kids down on a card, it will actually build their credit as well, as long as you obviously are good with credit.
Yeah.
You're not going to screw them over. But yeah, and they said by the time they're 18, they'll actually be able to qualify for lots of stuff.
Like my parents co-signed for me for a loan when I was like 16 years old, and I paid, I don't even know, it was like $100 a month or $75 a month. But I had it for 3 years and it just boosted my credit score. So
again, though, ultimately, it's what you do with it, right? Just because you have it, if you go and max it and then you don't pay it properly or on time or never pay it off, it's going to hinder things, correct?
Yes. So like a loan, I mean, that's always maxed out, right? So
Yeah.
if you go out and get a, $20,000 car loan, then that's maxed out. And then until you start making those monthly payments and never missing a payment, that's when it starts to build your credit. Whereas when you have a credit card, if you say never go over the limit by more than 50% is kind of the new rule. I always kind of say 70, especially if you're carrying a balance, but 50%. So if your credit card is $500 limit, never go over 250, and make sure you're always paying that off. I always tell my clients, get 2 credit cards, one for gas, one for groceries, something that you have to pay for on a regular basis anyways. Make sure, and then wait for that bill to come. So you either get an email or paper, and then pay it off completely every single month.
So could a person actually, if you know you're going to spend about $200 on groceries, could you actually put the money on the credit card and then go get the groceries? Can you actually do that, or will that hinder it?
It might hinder it. So
Okay.
I actually charge it. And then once you're like on a credit card, if your bill comes or like the email saying, okay, it's ready to be paid, go and pay it right then. So don't wait until like the due date or anything like that. Because if you go to the bank and pay it right on the due date, it might not actually hit the credit in time because it takes a couple days to process.
Okay.
Awesome. And then what about for new investors? Are there any best tips you could advise people that way?
Just be careful of the limit that you get on your home equity line. So the higher the limit, the harder it is going to be to get approved, just because I have to use that calculation. Also like the mortgage. So if you're refinancing your mortgage or like trying to pull out equity, try to go over the max amount that you can. So even if it is 25 years, I know it's starting over again, but that lower payment will help us because then I'm not having to debt service so much outside of the hassle-free house.
Could you spread it out over 30?
Yeah, you could. You might pay a little bit higher of a rate. And then you also can take advantage of like 20%. So you can either increase your payments by 20% or put a lump sum on your mortgage 20% every year. That helps it pay it off faster, but then we get to calculate this lower payment.
So in theory, if somebody was wanting to get really aggressive and potentially squeeze out that extra house, if they spread out all the mortgages out over 30 years and just amped up the payment by $100 a month, that might make sense?
Yeah.
Okay. There you go. There's a tip for you guys. So another anonymous question. What if you're a single parent and they rely on the credit cards? I don't know exactly.
Like rely on the credit cards to like live?
Like you've got maxed out and you're living kind of paycheck to paycheck, or I'm not really sure what.
What if you're a single parent and rely on the credit cards?
I would assume it's probably geared towards that.
Like living on your credit card. Just make sure that you're always making your minimum payment. Watch where your balance is compared to your limit. And so another thing too, if you're really close to your limit and you don't make that minimum payment and it pushes up and over your limit, that'll hurt your credit score. Like for example, like I had a client, he in May, I pulled his credit, perfect credit, was just under 700. Now they couldn't find a house. And then now they just came back to me 2 weeks ago and I had to re-pull because I have to re-pull every 30 days if that's the case. And I pulled it and it was actually below 600 because he went over his limit and missed 3 payments. So it was late 90 days. So it killed it.
Yeah.
100 points.
That's crazy. And this is the other side of things. When you go get a pre-approval, find a property, get it done because things change quickly. Evidenced by that, right? So pre-approvals only last for how long?
Well, if you don't do anything, like if you don't change your finances at all, it'll be fine. But if you make any like say it's 30 days I have to re-pull the credit. So if you get some sort of credit in between there, then I have to debt service that going forward.
And then another tip that some people could do is if you're going to go and buy a house and then you're going to buy a vehicle, make sure you get the house first because the car places, the financing places don't give a shit about ratios really. They do, but not really like the banks do for mortgages. So always lock in your assets as far as housing before getting any secondary financing. And then what advice do you have for investors whose credit score does not allow them to purchase property?
That would be a time where I would take them and I would work with them and we would build them up. I would give them points of how do we get ahead? How do we get your score higher?
Do you have any specific examples that you might have used? Like you talked about the guy, like he would probably just have to get his shit together then, like make the payments, or how long would it take for somebody like that to be able to re-qualify?
If you can pay down that balance to at least 70% of the limit, it'll help. Never miss a payment again, and probably like 6 months it'll be up and over, but it'll be still tougher to get approved because he has that late payment history, and that actually stays on your credit for 6 years. Whenever you miss a payment, 6 years.
So don't do that, guys.
And it shows how many ones you have and how many missed payments.
So what you're telling me is finances are very similar to weight. Right? So it takes me like 2 months to put it on, but 2 years to take it off. Yeah, got it. Now I understand finances.
You can wreck your credit really quickly, and it takes forever to build it back up.
Okay, well, there we go. So what do you think is the fastest way for a young person to grow their credit? We kind of talked about that. Credit.
Yeah, I would start off with a loan even, and then, I don't know if they'll let you have one when you're 6. I would try, because that's one of the best ways to do it. And just put something small on there.
Awesome. And then this is the fun part. What's the difference between good debt and bad debt? So we can each take turns answering this because we all have different takes on this. Alyssa's giggling, so let's.
That's my favorite answer. It depends. No, it really comes down to understanding what debt is all about, number one. And then number two, what are you doing with that debt? If that debt's going to turn around and give you a return, that's good, right? Even though you went and did a bad thing to get a good thing, okay? To me, they cancel each other out, so that means it's awesome. In my hands.
Good debt is basically it's more or less using your debt. To me, that is like bad debt. There's not really anything bad debt unless you have like $20,000 on your credit card and your balance is at $20,000. That's bad debt. But if it was $20,000 in a home equity line, that's different. That's a different type of debt. So I think it's just unsecured compared to secured to me.
Okay. And then how I look at good debt and bad debt is good debt is something that I'm leveraging that's going to put money into my pocket, whereas bad debt is something that's taking money out of my pocket, right? Again, everybody's making different choices. But if I was going to buy a vehicle that I didn't really need, then I would look at it like it's bad debt. Whereas if I was buying a vehicle to use for a business, that's going to be good debt because one, I can write it off. Two, it's something that is going to basically grow the business and go from there.
To expand on that with the vehicle thing, a prime example would be good and versus bad would be, okay, so you turn around and you get a hassle-free landlord house, and then you utilize the rent that you're receiving, your 15%, to go buy the vehicle.
There you go. And the other side of bad debt is what did you spend that money on? So again, Alisa and I went into debt. And some people might be like, well, you were debt free because again, I had sold my house when I was 28 and I was debt free. But at the same time, I looked at it like we were making an investment into our business. So for me, that was a good debt situation, even though I was redlining it for a long time, making the minimum payments, just kind of keeping my head above water. But I saw the bigger vision and I knew that that short-term pain for the long-term gain would make sense. And it was a good play. So for me, I looked at it like it was good debt. I just didn't go and, blow all that money on a trip and put in a new kitchen and pay off for all the stuff I didn't need in my world. I was investing in something that was going to pay dividends later on in life. So again, for me, that's my difference.
Honestly, our debt went into E.P.I.C and education into ourselves.
Yeah.
And that's literally the short and skinny of it.
Yeah. And when people ask us too, like, what do you invest in? Our business,
Mm-hmm.
right? We take very little when you think about the whole enchilada of what our company is. We throw pretty much everything back into the business so that we can keep the business expanding and growing. So when people ask us, well, how have you been able to grow from, we've doubled our portfolio every year, we've doubled our team every year, we've done all these things. It's because we have spent that time, energy, and extra money into the business so that we can keep it building. Because I've seen people run businesses where they are very profitable, they pull all the money out, and then all of a sudden bad times come and they have no business left because they literally let it dry. So, I don't want to point names or whatnot, but I used to work for a company that was doing really well because our market was booming and they had quite a large staff in essence. And then when times got tough, they ended up having to let everybody go, but yet they had a big fancy house. Yet they had a big fancy cabin. They had a big fancy RV, a big fancy boat, all these things, but they had to let everybody go. So was that a good choice? That's their own, answer. They're going to have to answer themselves, but we just took a different path.
And there are ways to get those things just strategically.
Totally. So yeah. And then how can good debt be leveraged? Kind of talked on that a little bit.
Yeah.
But it's again, if you can pull out a home equity line of credit and then put that to work somewhere else, you're leveraging it. Look at your house. If you have a house that's paid off to nothing or almost paid off to nothing, and some people look at that like it's an asset. The way I look at an asset is, does it put money in your pocket? So say your house is paid off, you're living there, so you still have to pay property taxes, you still have to pay your home insurance, you still have to pay for your utilities, do you not? So therefore, that asset is taking money out of your pocket. So is it therefore a liability? In my viewpoint, it is. Whereas if you can leverage some of that equity in your property so that you have it working and putting money in your pocket every month, you've just turned what was a liability into an asset by being creative and using leveraging. These are the things, guys.
What she said.
So what are some creative solutions for bad debt?
Give us one tip.
Creative solutions, like I would just say pay it down. Like don't use, if you're maxed out on all your credit cards, go and get a debt consolidation loan. At least then it's all into one and you can make that payment and then use that credit card, just tank of gas, groceries, only one thing on there per month.
So the debt consolidation, is that something you could line up for someone?
I can't do it directly, but I can definitely point them in the right direction and send them to somebody at the bank. Usually if you go to your bank and wherever, so say you had a line of credit and a credit card, let's just say Scotia. Go to Scotia and say, would you put this all into one because it's already their debt anyways. So.
And then what if somebody was really in trouble? They've been really bad with their money. They're really slipping on their payments. Maybe they've lost their job. They don't know how they're ever going to get out of this thing. Would you ever suggest a consumer proposal or a bankruptcy?
Yeah, it would depend on the situation. If it was really that bad, I would do it, because then they work with the credit card companies to get things lower, to, some forgiveness there. If that's the only way to get you out of it, then yes, I would, because then you're not going to be able to do anything for a lot longer. And if you do claim consumer proposal or bankruptcy, there is ways out of it. Even if it's still reporting on your credit score, then it's fine, because if you have 2 years, 2 trades after you've been discharged, we can still get you a house in the future.
So they're, those sound like really scary things, a consumer proposal, a bankruptcy, oh my God, world ending, but they're not. They just take time to heal from. But sometimes we learn our mistakes and we have to just go through those trenches, learn what the mistake was, and then not do it again. And next time, make sure that we just educate ourselves better and make better decisions.
Yeah, absolutely. And again, that's why bringing in an expert that can help you build that out, or send you to the right people that are going to work with you to make it a good strategy to move forward. Again, it doesn't matter what plan anyone puts together for you. If you don't stick to it or address what the underlying issues are, it's not going to get resolved ever. And
if you go into foreclosure, you can't do anything for 6 years until that's actually off there. So I would much rather see somebody go through consumer proposal or bankruptcy before that happens.
Okay, good to know.
Yeah, so deal with your stuff, folks. Deal with your stuff. So what role has debt played in the past with E.P.I.C Alliance Inc., and what role does it currently play?
Well, I think we touched on the past.
Well, we didn't really talk about how it affected E.P.I.C. So when you start a new company, it's really difficult to actually get debt, to get credit, because you're not anything really. It's like, wow. And for us, because we were a real estate investing company, nobody would touch us because we weren't putting up any assets. They're like, well, you're in real estate, put up an asset. We're like, we don't have any. They're like, too bad, right? So luckily we were actually able to work with, I think this is why we started the electrical company though, actually, because it was the same thing with women's entrepreneurs and with SEEV, Saskatchewan Indian Equity Foundation. We couldn't get any financing through E.P.I.C Alliance Inc. because it was real estate investing, but we opened up the electrical company because then we could. So again, sometimes you just got to be really creative and then, make things work hand in hand. So when somebody tells you no, figure out a way around.
That's right. And we built out that company, and now it's phenomenal with the amount of apprenticeship programs we have offered through our companies, and it's just growing and growing. And so that was a big opportunity, because that not only did we get the money out of that, but the networking we got from that, and the meeting of people that went, wow, you guys are really doing something here.
Yeah, and it's networking and figuring out what makes the most sense for what you're doing. And with that, even today, just to side note, we have not gone to the bank for any financing on any properties. We won't. We don't need to, because we would rather pay higher returns to all of our private investors, because that's where the win-win side is. Yeah. Why? Because for case in point, we actually just posted a deal yesterday that is funding tomorrow that we needed funds on, and we were able to get it funded today. Yeah. Right? If we went to a bank, do you think that would happen?
And I mean,
no comment.
The answer is no, guys. The answer is always no.
As the business grows and things come up, there will be other aspects of a bank that will help us. They will start calling our company and going, do you want a line of credit? Do you want a bigger line of credit? Like that kind of stuff will start happening, and that changes that. And we have some of that.
Yeah, we have a couple smaller loans, and now that we're established, we've been incorporated since 2013. We have credit cards and we have other stuff like that, but it took a long time to get there. Yeah. Like, let's be real. If we were just going to wait until we had actually gotten the credit established to do the things, we would literally.
We don't have that kind of time.
No.
Rochelle has to retire in a couple of years.
Yeah.
We don't have that kind of time.
I got 2 years to get to $1 billion, guys. Let's go. So what do E.P.I.C's budgeting strategies look like, and what tools are used in the budgeting process for the business? So honestly, this is a mixture of our, like Alisa and myself's balancing. So Alisa knows that we basically right now, in order to make our targets and stuff, have to buy a house a day. And so she's got a buying calendar and she tries to fill it up as best she can with buying a house a day. And then basically once I get that list, I go and Bailey and I go and hustle for the funds and we get investors in the pipeline. And then as we sell hassle-free landlord houses, of course, our fund to flip investors get their money back. They don't want their money back. They're like, go fund another deal. We're like, okay. And then it's just that whole, transition. What's been interesting lately and slightly frustrating, and I know you've been experiencing this too, but the deals are not closing on time for the hassle-free landlord houses. And it's just, again, the banks are tightening their purse strings, so we've had to move possessions out and switch this and switch that and get home inspections, which we never used to do before, and all these extra things, jumping through these extra hoops, which we're doing because we still want to get our clients the mortgages and we still want to be selling hassle-free landlord houses. It's just changed the game a bit. Again, that's just what happens. So
and now we're going to be in the 21st century because we're also bringing in a ton of software to help us, which will give us intense dashboards. I am like so excited. I dream of this at 2 o'clock in the morning, and I'm super excited because what that's going to do is you're asking about tools. So it's like for property management, things like it's a program called Building Stacks, and then Sage or CRE, used to be Sage 300, but now it's an actual real estate one. So these are things that are going to allow us to even figure out the data and the information faster and literally almost on a daily be able to have all this information, which I'm so excited about because what that'll do, the bigger and more on point your dashboard is and KPIs and all that stuff, the better your future budgeting and planning can be. And so I'm super excited about that because we're going to be literally in a place where we're going to know everything daily within 48 hours. I'm excited.
That's going to be huge. And we invested a lot of funds into that, but we knew that, again, it's that capital in, but it's going to streamline so many processes going forward. It's going to pay for itself tenfold. Yeah. So again,
it'll amplify everything.
Yeah. It's just figuring out where do you make those investments and then what makes the most sense for the business. So we are running out of time here. I just want to talk about the next epic hour. Yeah. This hour's flown by.
Wow.
Yeah.
So again sometime.
So the next epic hour is going to be Thursday, the 22nd of October at
noon Sasky time, 11 a.m. Pacific time, and 2 p.m. Eastern time because we haven't had time change yet.
All right. And do we want to do a quick tour of this rental?
We sure can.
So this was a distressed property owner. I believe they lived here. We painted over the fire engine red cabinets.
Oh, yeah. there was some teal, there was some fire red. It was, wow, this is the house of rainbows.
There was a lot of stuff happening here. So I don't know if they just like discount paint or what was going, but yeah. So.
I think it was, oh, look, it's on sale for $2.99. I'm buying it and painting it.
I'm pretty sure. And but it's in what area are we in?
Confed.
Yeah, we're in the Confed area. So it's in a desirable neighborhood for rentals because, people are just a little bit out of the alphabets and all that kind of stuff. There's good schools around here, all that. And yeah, do you want to do it first?
Sure.
Alyssa knows more of this one. That's really good.
Finally. No. Thanks, actually. Okay, so yeah, you can follow me around.
Just make sure that one.
Okay, I'll work on that. All right. So we're going to head into the kitchen. Remember how Rochelle said that we were fire engine red here? So honestly, this was just mostly paint, right? But again, safe, sound, and secure. That's all we need here. Everything functions. Everything works. It's great. I'm going to focus back on the living room where the giggling people are. And there's Bailey, and Ashley is upset. She found something. It's a spider. Oh, okay. Who cares? I'm like, it looked like a spider. I was like, ay. And you can see, again, just some good paint. The flooring was in good shape. So these bedrooms here, they're a good size. One of our tricks is we don't put closet doors on our rental properties. We just find that all they are is something to break. And very few of our tenants complain about that or won't rent a house because of that. So again, you can see good windows, everything's good there. The bathroom, it's neat, tidy, functionable, right? That should work. No problem. Oh, look at this. We're gonna have a good laugh. What does that say? That is Rochelle's, okay? Nobody else can use it. Every house needs a Rochelle toilet paper roll. So again,
Yeah, the girl's got my back.
and then there's another bedroom, as you can see here. Just a good size. The access to the bathroom, honestly, that's just was plywood that was there, and we just painted it so it doesn't look so standout-ish. And then same thing, another good sized room. Oh, we need to clean that window. Woo. Good sized closet. Just a really good, you can get a good sized bed in here. And then I'll take you downstairs to where we finish the basement. Windows and doors are always a big thing with us. We like good closing doors, well locking doors. And then here, down here, we put more money into this because everything upstairs was functioning. So we always, electrical has really become an issue with properties. I don't know what it's like in other places in Canada, but anything below like 60 amps, basically a bank won't touch. Insurance won't touch around here. But anyways, here is a bedroom we added. This was just dead space in this basement. And we got creative, just kind of put the closet in the corner because of the way the basement was shaped. We had egress windows cut in. We installed window wells. Everything's just painted. It seals, and it's good to go. Okay. And then you can see it's got this massive rec room, and we can absolutely, they can put TVs down here, couches down here, and see, here's that closet. And what we did is we put it here because then that still allowed us to put the plumbing here for the washer and dryer. If we had put the closet in here, we would have lost that space. So instead, we just went, well, I said, just stick it there because, in the basement here, we have the venting and the pole here, or the drain and the pole here. And really, that closet, there's nothing you could do with this space anyways because of the telepost, right? So no big deal. And now we still have the ability to have these stay here. This is a bathroom. My bad, washer and dryer over there. Anywho, but this is actually going to be a bathroom. So there's the toilet flange, there's the shower, and there's the vanity. So sorry, we would have lost the bathroom if we had put the closet in here. Okay, so then we go and we are in the final room. So again, nice big bedroom or rec room or whatever you want it to be. But we put the window in here because it allows it to be an actual bedroom, no problem. But you can see, we just did flooring, ceilings in the bedrooms. We didn't even worry about ceilings in the rec area because they don't really care about that, our tenants. And they're just happy to have, separate spaces for bedrooms, somewhere to put stuff, and everything's clean and completely functionable. And, again, they can take this space and utilize it really, really well. By finishing this basement, just like we did, nothing too crazy. If we add that bathroom, that'll help this property go up again, even more. What we did is we prepped this property for future sale because, like Rochelle said, this house is in a neighborhood that will eventually convert into homeowners. And we will turn around, and this would be one of the houses that we would talk to our investors on and say, hey, you want to make even more money? Let's turn around and flip it out to the public. So again, now the bathroom's all ready to go. We only like typically one bathroom in our rental properties because here's how it works, folks. If you have two and they have access to both, there's a really good chance they're going to screw them both up. If they only have one, they look after it and they're going to make sure it's cleaned and maintained and all the things. I don't know why. It's just the nature of the beast when you're dealing with tenants, just in our world anyways. So yeah, again, the stairs we just painted, nothing too crazy. But like I said, everything here is just really usable, really functional, easy to maintain, easy to fix, okay? Again, you also have to go for your clients' tell and who they are and what they'll want and what they need. We know our tenants will come in and love this product, no problem. We can come in, this is easy to repair, this is easy to clean, all those things. And again, this is one of our paint colors. that you've seen over and over. And the reason for that is we only have 2 paint colors, a gray and this kind of beigey color, because you turn around and you're either doing one or the other. And with doing that, then what happens is it's easy for people to come and repair. They walk in and see, oh, it's the beige paint. I know exactly what I'm getting. And it cuts down on the guesswork. I know a lot of people will try and paint each property based on the layout or what it is or where it's located. Honestly, pick 2 color themes, go with it. Again, remember, it's a rental. Don't get emotional about it. You're here to make money. You're here to make safe, sound, and secure. Okay? It's not what everybody's going to live in. Oh, we're out of time. Okay. I guess that's it. All right, I'm going to run up so we can do our official good night. Goodbye. I guess it's noon. It's not good night. Okay, for me, it's good night. I've been up since 2:30. It's good night for me. I've been up since 2:30.
Oh my God. All right. Well, thank you guys for joining us. And until next time,
Stay epic.